Is there anything in the numbers we saw today that indicates yes or no on transitory? Is it starting to spread beyond just the recovery prices?
Well, we're still seeing pretty much, the kinds of things that were affected by the pandemic are starting to actually retreat a little bit. Airfares were off a little bit. They're about flat. We saw hotel room rates were still up. Rental car rates were down. So that's good news. That said, what do I worry about as we get into the turn of the year? People forget that we had a sharp deceleration during the pandemic and since the pandemic started in shelter costs. Now, that wasn't just hotel room rates going down. It's that, rents in major urban areas actually fell. Those have now bottomed. And we know that we get to owner's equivalent rent. That is, we get an imputed rent on home values. And those are expected to go up as we start to see some of these housing prices seep into that. And we get away from the mortgage restructuring, which lowered monthly payments. When people make their estimates of their imputed rent, they take into account the fact their mortgage just went down because they refinanced it. Well, that is now getting past all that. And as we get into the latter part of this year and early part of 2022, I worry about the residual inflation we see in some of those basic items like food and shelter.
So take that all and put it together and talk to the Federal Reserve officials as they meet in Jackson Hole a couple of weeks from right now. A lot of people think that's going to be an important meeting in which they may indicate about tapering or not tapering the bond purchases as a prelude to raising rates. What do you think the Fed will make out of all these data, and what does it tell them they should be doing or not doing?
Well, I hope to be there as well, depending on what happens. I do have my flights, so we'll see. But, I think the important issue for the Fed is just the incredible bounds of uncertainty. It's so easy to armchair and sit there and think, well, the Fed should be stopping asset purchases, as soon as possible, given how low interest rates have been. That seems to be a low-hanging fruit for them to sort of begin the tapering process once we get into September, the end of the year, start to taper those asset purchases because we just don't need them at the moment. That said, there's a lot of uncertainty. I mean, the reason they established those asset purchases in the first place was because how much markets melted down, which everyone seems to forget, that we had a financial crisis along with a pandemic in March of 2020. The Fed stopped the financial crisis, and the pandemic was shorter-lived in some ways because actually Congress stepped up and provided fiscal stimulus and provided incomes and people with cash when they lost their jobs. That's what's so different this time around, but it really doesn't give us an easy roadmap in terms of where rate hikes go from here. And although I think it's still an easier decision to back off on asset purchases, it's going to be a tough call in 2022 of when to start liftoff. I think we've got many people who are rotating on the Fed who've already got 2022 penciled in as rate hikes. Many of the people who will be voting on rates next year are those people, so they'll dissent if we don't start to see some rate hikes. And I think that's where there's going to be a lot of tension. And to be honest with you, it's a tough call because we're talking about moving to an economy that's going to be warmer. That's what the Fed would like, even though it's cooler than today, but warmer than it has been for decades.